And what about these two properties in Australia? I've been reading, even though for Asia Pacific, hotel investments down for the first half of this year, it seems like Australia is doing rather well. Are there certain areas of the region that are doing overperforming and some that are underperforming?
Yeah, well, Australia and Japan tend to overperform in terms of liquidity across the region. They're both developed markets, very transparent, capital flows easily from overseas, and they're both very popular travel destinations. Australia is facing a few more challenges compared to Japan because interest rates are very high there, and that's caused a few deals to fall over the last 6 to 12 months. But Japan continues to be one of our favorite markets because of a very low exchange rate historically, which underscores all the travel demand that's going into the country. At the same time, you have low interest rates, which will allow buyers to meet their financial targets and also, generate healthy returns in the next few years. And Japan is just an amazing destination. I think everyone wants to be there.
I know I do. So the first half of this year, a bit lackluster. What are you expecting for Q3, Q4?
Yeah, so the pricing gap that existed between sellers and buyers has been there since probably fourth quarter of 2022. And what we're seeing now is that there are a lot of investors on the sidelines that have been waiting, high net worths, corporates who are looking to deploy capital in the sector. And with the rate cycle close to stabilizing at this point in time and inflation abating in most developed markets, we think investors will be a little bit more risk on, willing to take the plunge. And we also see that for the most part, markets are holding up in their trading. Everyone thought, well, rates will decline. This is just a blip. Everyone's traveling now, but it's going to dissipate. That hasn't happened. It hasn't happened in Asia. It hasn't happened in the US or Europe. So investors are a little bit more confident now that they have more data on their fingertips.
Kevin, are you getting any insight as to where hospitality or hotel CFOs are prioritizing the spending? And is it on IT, given the competition and the disruption in your industry from home sharing like Airbnb?
So I think at the moment, a lot of owners are first concerned with how to tackle with high interest rates. And for those who have been overexposed, they're looking to potentially release some capital, shore up their balance sheets, and protect their financial position over the next 12 to 18 months. Sure, you're correct. IT is incredibly important, and a lot of owners are now looking to further invest in that to stay ahead of the curve. It's what guests demand, not just from a leisure perspective, but also from a corporate and meeting perspective. And likewise, ESG is also incredibly important at the moment. Stakeholders, shareholders, financial institutions, and guests are all demanding owners to be held more accountable to reach their carbon neutral targets. And while this may not be important today, we're really expecting a lot of owners to put emphasis on ESG because it'll help future-proof their business in the next 3 to 5 years.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.